This is Business Weekend with Ross Greenwood.
Hi there and welcome to Business Weekend for a brand new year. Thanks for your company. I'm Ross Greenwood. Coming up on the program today, the coalition imploded this week, giving up the chance to prosecute the government for likely increases in interest rates and for presiding over a low-growth economy with rising debt. We speak with the Shadow Treasurer, Ted O'Brien.
There's a lot of noise out there. It's been a tough week for the coalition, which is now not a coalition. And so there's no doubt we've got a lot of work to do.
The aftermath of the Bondi attacks on the Jewish community has given all Australians a time to reflect on our nation's values and our relationship with Israel. For decades, unknown to most, Australia has benefited from a wide range of Israeli innovation. We speak with the Chief Executive of the Australia-Israel Chamber of Commerce, Michelle Blum.
Created more startups per capita than any other country in the world, and now unicorn nation, more unicorns per capita than any country in the world. How has this little country done that?
And over these summer months, gold and silver prices have absolutely boomed, and that's given miners a big opportunity to expand existing mines, to seek fresh greenfields exploration, or to take over competitors. We speak with the Chief Executive of one gold miner looking at every one of those options.
Global geopolitics and the instability in the world is the key driver for the gold price today.
But look, we'll start the program, as we so often do, on the state of our economy. According to money markets, all that stands between the Reserve Bank and an interest rate rise in early February is this week's inflation data, which is due out on Wednesday. And on inflation, the news is not encouraging. NAB is forecasting annual inflation to rise from 3.4 to 3.7%. For underlying inflation that the Reserve Bank looks at, it will rise, it says, from 3.2 to 3.3. But along with unemployment falling, that explains why money markets now suggest the chance of a rate rise is greater than 50-50 in February. Banks already are responding. They're increasing fixed-rate borrowing costs as money market rates rise ahead of any RBA move. And it's not just interest rates. This week, the OECD gave Australia's policymakers a genuine tickle-up, saying that a lack of zeal to reform our economy has led to poor productivity, greater economic uncertainty and living standards that have gone nowhere in almost 2 decades. Not that you'd have known this listening to the Treasurer's press conference this week. With the coalition imploding, the government right now is plain sailing through all of those economic headwinds.
That is that we have shown in this country that we can have an incredibly strong labour market, an historically strong labour market, at the same time as we make progress on inflation. That's been the story of our first term. It makes us rare in the world that we've been able to achieve that double.
But rising inflation and interest rates do have a genuine impact on voters' hip pockets. The OECD suggested new and higher taxes, but the Treasurer, he scotched some of those ideas this week and even suggested that more tax cuts this year are on the way.
The government won't be pursuing or implementing an inheritance tax, for example, but there's commentary around that in the OECD report. We've said we're not looking to increase the GST, for example. That's a perennial in those sorts of reports. But it does talk about cutting income taxes. And we'll be cutting income taxes this year and next year as well. And we cut them last year too.
So let's bring in here the man who, I might say, has had his thunder stolen by the political machinations in the Liberal and National parties this week, the Shadow Treasurer, Ted O'Brien. Ted, always good to chat to you. Many thanks for your time. Do you get that sense yourself at a time when you could be prosecuting the government on its economic track record, on the potential for higher interest rates, on the fact that inflation is likely this week to continue to be higher, on the fact you've got the OECD report urging the government to do more to boost productivity, that really right now you're not politically in a position to be able to argue that for the Australian community?
Ross, there's no doubt it's enormously frustrating when you're taken off your main task. And the main task is holding this government to account on all of those things you mentioned. And I dare say the everyday Australian who's going about their daily lives, they want to hear the opposition talk about these things that matter to them, that affects their daily life, affects how much it costs when they go to the grocery store, how much it costs when they drive their car and get it maintained. As we go to a new school year, how much it costs mums and dads to ensure they're ready to get their kids to school. That's what they're focused on. And when we get big economic news, especially when it comes from international institutions, they too trying to hold our government to account. I have to admit, it has been frustrating when politics dominates and overtakes.
And that being the case also, the question is about confidence in your party, your side of politics, to lead in the future, for your ability to become the Treasurer, to have your hands on the levers. That's where the frustration must surely lie, not just for you, but for those people in the community who might seek an alternative to the Labor Party.
Well, and I think anybody who's in the real world does want to have an alternative, because it's not working today. They know that everybody is getting poorer, the country is getting weaker. And so I think it is frustrating for everybody. But again, therein lies a challenge for us, Ross. Notwithstanding the week that has been, we have to ensure we remain completely focused on the task at hand. And that means putting the national interest first. It means focusing on the Australian people. Knowing full well there's a lot of noise out there. It's been a tough week for the coalition, which is now not a coalition. And so there's no doubt we've got a lot of work to do. But that won't distract us as a Liberal Party from focusing on the main game, which is ensuring that we have an Australia which is stronger, which is more prosperous, and one that is more united. So that's our job, and the economy is central to all of that.
OK, but the reality is also that there's a government which has been very modest in its ability to transform Australia's economy, picked up by the OECD report, which really urges changes in the nature of tax policy. But that also comes at a political cost. The government right now has huge amounts of political capital to spend effectively, if you like, but it seems, again, very unwilling to do that, to make the changes that could boost productivity. Do you sense now there's almost a chance for an opposition to swing from the rafters to really lay it out to Australians as to how to radically change this economy for the long-term good?
Well, I think the long term should be underscored there, Ross, because unfortunately what I see today is a government that is very short-term focused and focused only on the politics. I don't understand their timidity. I mean, you have a government which does have a whopping big majority, and yet they are completely averse to making some hard decisions. They're completely averse to having ambition for the country. And if you don't have ambition for the country, then you don't have ambition to raise the living standards of everyday Australians. And getting then to your point about as an opposition, it is why we have to speak very plainly about our views on tax, on industrial relations, on energy policy, on regulations, on approvals, on trying to attract more investment into Australia so we can grow the economy at large. The more we can have the private sector doing the heavy lifting and growing the economy rather than government, then you'll see all boats lift. That's what we want to see, because that is what raises the living standards of everyday Australians. That's what's going to raise productivity. So I think that's the task that lies ahead.
OK, so at the same time, of course, you've got government debt, which is going to continue to rise into the future. You've got interest as a proportion of our GDP going to continue to rise. That's because government spending has clearly risen much more dramatically than what anybody anticipated. There was even the reports this week about government departmental spending rising at record costs. This surely is unsustainable. This is where the political argument should be.
It is where the argument should be, and this is the highest spending government in 40 years. And you mentioned the OECD before, and the IMF also put out a report, and they made it very clear that, unfortunately, Australia will see inflation remain higher for longer. Why? Government spending. It all comes back to the same thing. We have a Labor government that believes that the centre of the economy should be the government itself. So they keep using taxpayers' money. And when taxpayers' monies run out, they basically put it on the national credit card. And there's a moral obligation here, Ross, I believe, when it comes to debt. It's not just the fact that debt's going to hit $1 trillion within the next few months, but that debt will have to be paid off by the next generation. The same generation, which is looking like it will not be as well off as the generation before, something that hasn't happened in Australia. Usually every generation gets a little bit richer than the one before, but that's not happening. They're going backwards. And the answer from this government is to be timid on economic reform, not grow the size of the economy, to overspend and actually slug the next generation with more debt. So there's a very moral aspect to this, not just one driven by numbers and economics.
OK, we're about to talk to Paul Bloxham, the chief economist at HSBC. And I know what he's going to tell me. He's going to say that the Australian economy cannot grow faster. It cannot grow faster to help pay off that debt, to be able to try and generate some, get up and go in this economy. Because if it does, because there's no productivity growth, it will create inflation. And therefore higher interest rates again will come. This is a dilemma that only government can solve, not the Reserve Bank.
Yeah, exactly. I mean, the Reserve Bank is limited with what levers it can pull. This comes down to government. And again, that same IMF report that came out last week made it very clear that a policy response has got to be to rebuild the fiscal capacity of government. Again, it gets back to stop the spending spree, stop spending so much money, because the public sector, government, is crowding out the private sector. We need to change that. We need to have an Australian economy where private enterprise can flourish. We can attract more investment in, we can have more competition, more innovation, a more dynamic economy, because as you know full well, Ross, it's that side of the economy, the private sector, that has higher productivity. And it's higher productivity that will ultimately lead to Australians having a better standard of living. This government is focused on only the public sector. And the more it's focused on that, it's limiting the ability of the economy to grow, which means we have a problem on the supply side of our economy, and that is really a government-induced problem.
OK, there's another problem also, and that is the speed with which it takes to set up a business, to create a new building, to get approvals. All of these things, again, come back to government, be they local, state or federal government. And again, the incentive to go out and create a business is not really there when you don't keep as much of the money that you might otherwise make. Are these things where you can appeal to Australians to get them to recognise there is an alternative strategy?
Yes, because the Liberal Party believes in smaller government. And that means that we need to get out of the way. That also means in practice, you need an approval process that is easier, is faster, is more certain. You need to have fewer regulations, and regulations that are fit for purpose, not just actually putting up barriers to business. You need to make it easier for companies that work across different states and territories in Australia. You need to be sending the right signals to the international market so foreign direct investment comes into Australia. You need to also be incentivising Australian investors that they can do business here and they don't just have to send their money offshore. All of this comes back to the basic foundations of the economic agenda of government. If government wants to put itself at the centre, then they're going to muck it up. Our philosophical approach as a Liberal Party has not changed, which is smaller government, and let those who work in industry do what they do best. I mean, Ross, I spent over 20 years in business myself before coming into politics. I know what it's like to be out there trying to do deals. I know what it's like to sit across in boardroom tables trying to negotiate capital to get a deal done. All of the things we've talked about impact decisions about whether money comes to Australia. I've been there, I've done that, I've seen it, which is why it breaks my heart when you have a government with such a whopping majority, so timid and not prepared to pave the way so the private sector can do what it does best.
So I think a lot of people would say that the Liberal Party, the opposition, getting its own house in order would also be a good thing for this nation. Ted O'Brien, many thanks for your time.
And for yours. Thanks, Ross.
Well, I want to now drill down further into our economy and overseas as well. Interest rate rises here are seemingly close at hand. Now, a year ago, for most, that would have been almost unthinkable. Also unthinkable is the idea that our politicians could make the line call on those interest rates and not our independent central bank, the Reserve Bank. Now, if politicians like Jim Chalmers made that call, and he gave plenty of hints along the way, then rates no doubt would have been cut harder in the past year, and that would have meant inflation would have taken off rapidly, sparking real worries right now about an economic boom-bust cycle. This week, though, Chalmers was all in favour of an independent Reserve Bank.
I don't preempt decisions taken independently by the Reserve Bank. There are good reasons why treasurers don't do that.
But in America, Donald Trump's attack on his own Federal Reserve has been relentless. Trump has constantly criticised the Fed Chair Jerome Powell for not cutting interest rates more quickly. He's even suggested he could go in and do it himself. Well, now there's a Justice Department criminal investigation into Powell over cost overruns at its new headquarters, and it's raised serious questions about the political interference into the famously independent central bank.
Well, he's billions of dollars over budget, so he either is incompetent or he's crooked. I don't know what he is, but he certainly doesn't do a very good job.
I want to bring in here Paul Bloxham, Chief Economist at HSBC Australia and a former economist at the Reserve Bank. Paul, always good to chat to you. That whole issue about who sets our interest rates, why is an independent central bank so important to the stability of our economy?
It is absolutely fundamental that a central bank is independent, and the larger part of that is that they have an inflation target. Their objective is to try and maintain steady inflation. And as we know, when the economy is in an upswing, it's difficult to slow it down, and it's not very necessarily the case that governments like to lift interest rates. So, it's a hard task to do that. We need an independent central bank to do that. And likewise, when interest rates have to come down, they have to come down, and an independent central bank determining that's important as well. Stability of the economy relies on stability of inflation, and having an independent central bank is paramount to maintaining that. OK,
so you're a student of economics. Tell me, what was it like before there was independence of central banks around the world?
Well, it's fundamental for maintaining stability in financial systems and maintaining stability in inflation. And we've had a long stretch of independence of central banks. What you could say is, if you look around the world, different central banks have had differing degrees of independence. And when you've seen that independence break down, you haven't had particularly good economic outcomes. You've had inflationary surges and so on. I think what you can say is that it is absolutely fundamental to the well-functioning of the financial system and to maintaining steady inflation that central banks are able to be independent. And I think in Australia's case, we have an independent central bank that is very much reaffirmed in legislation, and it's very much reaffirmed by the Treasurer as well, as you noted. OK,
so given what took place with employment numbers this week, the unemployment rate suddenly falling unexpectedly to 4.1%, if we see the inflation number as expected to be higher this coming week, do you believe our independent central bank will have no fear or favour in raising interest rates if it has to?
I think the RBA sets policy based on the mandate it's given, which is it's got to try and aim to get inflation to be 2 to 3% in the medium term, and it's got to try to do that in a way that maintains as close to full employment as possible, and those two things are its primary mandates. And at the moment, we've got an economy where inflation looks as though it's above target, and we'll see what that print brings on Wednesday. But I think the expectation is certainly that the core measure will rise back above their target band. And we got these labour force numbers just gone by, and they were stronger than expected, and they're telling us that the unemployment rate's falling and that we're actually probably operating a bit beyond full employment. So we're beyond fully employed with inflation above target. I think the case is quite strong that the RBA will have to lift interest rates.
OK, but history also tells me that central banks don't just move interest rates up or down once. They generally have a notion in their mind that there's 2 or 3 rate moves there, just to make certain the community, the business community, get the message to what they're doing. What's your own sense here? Is it a tap of the brake once, or do you sense there might be 2 or 3 in that series?
I think we'll be tapping on the brakes in the sense that I don't think this is the beginning of a big tightening phase. And that comes about because we didn't actually cut interest rates very much. I mean, interest rates didn't...
Or far enough, you could argue.
Well, no, I think they actually cut them far enough. What they didn't do, probably, if you go back far enough, the approach the RBA has taken has been something quite experimental, as they themselves have noted. They lifted interest rates by less than other central banks when they had that inflation surge in the post-pandemic period, so they didn't slow the economy down as much. And that's why we've been left with the RBA not cutting very far, and still, part of the story is that's why inflation has proved to be a bit too sticky. But I think that the main story here is, no, I think the RBA will be able to lift interest rates a bit further, will need to lift interest rates a bit from here to get inflation to confidently be headed back to target. We've got in mind they've got two hikes likely to come. So one in February, one a little later this year, and that would be enough to put a bit of downward pressure on the economy, slow it down a little bit and get inflation back on track for getting back to the midpoint.
So you're one who says that the Reserve Bank probably, given all likelihood of what happens with this inflation number this week, is likely to raise interest rates in February?
Yes, that's right. That's what we think. We think, and that comes about, one, because the inflation numbers we think are going to print above, on the core measure, which they focus on, the trim mean, above their target, and still running at a bit of a rate that's a bit too uncomfortably high. And two, because we got these labour force, these employment numbers, which tell us that the jobs market doesn't look like it's loosening further. If it's not going to loosen further, it's very hard for the RBA to argue that above target inflation we've already got will actually head back to the midpoint of their target band without the economy needing to slow down a bit. What's going to slow it down? It's probably not going to be fiscal policy, because fiscal policy still looks as though it's
pretty loose, right?
So
that's the government spending.
In principle, it's got to be the RBA.
Okay, so I want to come back to something you and I have talked about a number of times in the past, but it's so true now. This economy cannot grow faster, which the government needs it to grow faster to afford its own spending. But it can't grow faster without creating inflation and therefore higher interest rates. That is a fundamental problem and dilemma for the federal government, surely.
Well, this is the problem. When the RBA, and we think they will, if they do lift interest rates in February, it's going to be quite a painful hike, I think. Because normally what they're able to say is, look, we're lifting interest rates because the economy's in an upswing, growth is picking up, the private sector's recovering, and the reason we need to lift interest rates is because the economy's strengthening. And that's normally the narrative. But in this case, I don't think that's the case. I think the economy's not particularly strong. It's just that we've run up against our supply constraints. We've got a fully employed economy where we're operating at full capacity or a bit beyond. And that's primarily because, as you're alluding to, productivity has been very weak, persistently weak. So we've got an economy that has had a modest growth upswing. I mean, GDP growth only ran at 2.1, and that's been enough to generate a pickup in inflation because the economy has a weak supply side. We haven't done enough in terms of reform to speed up productivity, and that ought to have been a focus. And the other aspect of this story is there's been a very large amount of public spending going on, and that's been somewhat crowding out what's been going on in the private sector.
OK, so your bottom line here is, if there's a message to government, a message to the community, and that is a timid government that does not reform boldly, despite the fact it's got a huge majority, and which continues to spend public money in record amounts, is going to therefore create inflation unless they do something about those other things.
I think we've got a lot of growth opportunities in Australia, and let's start there. There are abundant growth opportunities.
Sure.
But to take proper advantage of those growth opportunities, the thing that's standing in the way is we have suboptimal policy settings. We need to do more on the tax system, more on the industrial relations system, more in terms of increasing competition. We need to look at the regulatory environment and streamline it as much as we can. Because if with only 2.1% growth over the year, we've already got a sticky inflation problem, that's a challenge. We should be growing faster than this. We should be able to sustainably grow faster than this. And what we're going to learn, if the RBA does lift interest rates in February, is that no, we can't. And actually, the challenge there is to do the reform we need, make the adjustments we need to be able to grow faster, to lift productivity, to be able to grow our economy faster. If we don't do that, we're not going to lift living standards in the future as much as we have done in the past. And that, I think, is what we ought to be aiming at.
OK, just a final one for you. Do you think over a long period of time, because we have an independent Reserve Bank, that independent Reserve Bank is either too much onus in terms of trying to correct and adjust our economy has been placed on the central bank rather than the policymakers, the politicians, but taking the responsibility for their own actions to try and drive this economy forward?
The way I'd put this is I think we spend way too much time talking about monetary policy and what the RBA does with interest rates. In the scheme of things, they've got a pretty narrow mandate: maintain inflation between 2 to 3% and maintain full employment. And they've got one policy tool to be able to achieve that, really, in principle, moving the cash rate around. Interest rates are exciting to talk about, but that's only one aspect of the economy. All the other policy tools, all the other things we could do to actually be able to lift our living standards, grow our economy faster, be more efficient, they're all in the hands of the fiscal policy makers. So we should spend a lot more time talking about and focusing on all of the aspects of fiscal policy. I've run through a few of them already, and supply side reform. We had a big discussion in Canberra back in August last year about all the things that need to be done. We need to do more of them and other things as well, and we need to work on speeding up the pace at which this economy can grow.
Paul Bloxham, always good to chat to you. Many thanks for your time, and we'll chat to you again very shortly. So after the break, being our first program of the year, Ed Boyd brings you up to date with all the big business deals that dropped over the holiday period. As gold prices boomed, the dilemma for gold company bosses is to whether they explore, drill deeper or launch takeovers. It's great to have your company here on Business Weekend. Well, the summer break is normally pretty quiet for business. The big stories are normally about Boxing Day sales, which are kind of being overtaken by the Black Friday sales, if you think about it. So this is typically a chance for executives to kind of switch off, watch a bit of cricket or tennis, maybe some corporate hospitality around the place. But not this year. Kerry Stokes' SGH team were busy outbidding for BlueScope Steel. Then there's also the potential $300 billion merger between Rio Tinto and Glencore. And the US President, Donald Trump, well, he's always keeping things interesting. Ed Boyd recaps a busier than usual summer.
The new year began with a bang. On the 3rd of January, the US military launched a strike on the Venezuelan capital, Caracas, capturing President Nicolas Maduro. This caused global oil prices to drop, then rise, as traders tried to understand what the American intervention in Venezuela would mean for global energy markets. Venezuela has the world's largest estimated crude oil reserves, but it's one of the lowest producers among the OPEC nations. President Donald Trump was quick to reassure his nation that the oil would keep flowing.
We're going to have our very large United States oil companies, the biggest anywhere in the world, go in, spend billions of dollars, fix the badly broken infrastructure, the oil infrastructure, and start making money for the country.
During Trump's press conference, shares in oil giant Chevron jumped 10%. ExxonMobil and ConocoPhillips each gained 4%. But it remains unclear whether these American giants will invest billions of dollars into Venezuela's ageing oil infrastructure. Last year, Venezuela produced around 1 million barrels per day, barely 1% of global production.
So we're really, if you look at it, we're taking back what was taken from us. They took our oil industry. We built that entire oil industry, started a long time ago, but they took it and they were very ungracious to this country, but now they're being very nice.
In Australia, another corporate bombshell was dropped. Media and industrial billionaire Kerry Stokes landed a $13.2 billion takeover offer on the boardroom table of BlueScope Steel. The offer was from the Stokes-controlled SGH Limited and the US Steel Dynamics. It makes sense for SGH, which has a strong track record of running industrial companies, including Boral, WesTrac and Coates. For $30 per share, SGH Group would take ownership of BlueScope's Australian assets, and Steel Dynamics would control the American assets, including the prized North Star Steel Mill in Ohio. BlueScope quickly rejected the bid and said it's the 4th time they have knocked back Steel Dynamics in the past 2 years. BlueScope chair Jane McAloon said, "Let me be clear. This proposal was an attempt to take BlueScope from its shareholders on the cheap. It drastically undervalued our world-class assets, our growth momentum, and our future, and the board will not let that happen."
BlueScope's obviously rejected the deal and said it's undervaluing their overall business as a whole, being the Aussie as well as the US. But Kerry Stokes is very smart. He knows that FIRB, Foreign Investment Review Board, if they were trying to do if there was a US company trying to take the Australian assets, it'd get basically shut down, wouldn't happen. So they're hiving that off. They're taking the Aussie. And remember, he's bought Boral a year and a half ago now. So he knows how to do these things quite well. And then Steel Dynamics taking the US. Now, the US, I think, is the jewel in the crown because remember, Trump with tariffs, if you produce stuff here in America, you don't get any tariffs. And Steel Dynamics obviously knows that, and it's a big part of it. So I think there's lots more water to go under the bridge.
Shortly after the takeover bid was announced, BlueScope declared a special dividend, giving $1 per share to investors. It's just BlueScope's second special dividend in 20 years and clearly a way to appease shareholders. It seems to have worked. Major shareholder Australian Super, which owns about 13% of BlueScope, said it will only support a deal that is materially higher than $30 per share.
Or maybe just sweeten the deal a little bit and just sort of potentially get shareholders to stay with BlueScope versus somebody else.
But remember, when it comes to takeovers, the Stokes have a habit of hanging around and eventually getting what they want. The biggest deal of the summer is the proposed merger between one of the world's largest mining companies, Rio Tinto, and Glencore, one of the world's biggest commodity trading businesses. What they have in common is massive copper assets. The proposal is worth up to $300 billion and could involve an all-share merger. Rio Tinto is clearly keen on Glencore's copper assets, including mines in South America, Africa, Australia, and a refinery and smelter in Canada. But Rio, curiously, already sold off its coal assets, and Glencore has lots of coal, so that business could be spun off into a separate entity.
My view is personally, Rio sees a lot of options and attraction in the Glencore portfolio. Glencore have said their copper business can double over the next 10 years. Putting the two businesses together would clearly make them the number one global copper player. That's what the market wants to invest in. So it's a great story to sell. So our expectations is we probably will see some deal. We're yet to see it. Rio has until the 5th of February, so a couple of weeks away, to either put up or shut up, as we see under UK takeover law. And then the question will be, once we see a deal, if it is on the table, does someone come in out of the woodwork to interlope into that deal?
BHP is currently the world's largest producer of copper, but it would be knocked down to second place if Rio Tinto was to take ownership of Glencore's copper mines. BHP tried to buy Anglo American in early 2024 to expand its own copper assets, but this bid was partially thwarted by the UK's takeover laws. Rio Tinto has until February the 5th to make a firm offer for Glencore, or, like BHP in the Anglo case, it will be unable to bid for Glencore for at least another 6 months. Mining mergers are complex deals and often go wrong. BHP's 2001 takeover of Billiton was a failure. Billiton assets were eventually spun off in 2015 to form South 32. And Rio Tinto has a poor track record too, with its untimely purchase of aluminium business Alcan almost 20 years ago.
I mean, the mining industry, not just Rio, but the mining industry as a whole is littered with probably more disasters than successes. Right? I mean, Rio, everyone will remember the deal of 2007 buying Alcan. That hasn't quite worked out, but now the aluminium market looks better, but it's been 20 years in the making. So look, I think we will see. I mean, Glencore is a trading company first, operating company second. So, Rio's having to negotiate with people who see themselves as traders, and, it's the art of the deal. So, we remain watchful and to see what comes out of it.
Now, one thing that did happen over the holiday period is that precious metals, gold, silver and platinum, all boomed to record highs. And again highlights the need for gold or gold shares in any portfolio. But even gold miners now face a dilemma of their own. Do they dig for more gold in existing mines, or do they hunt on the stock market to try and take over mining rivals? Ed Boyd spoke with Wayne Bramwell, the chief executive of the gold producer Westgold.
Thanks and great to be here today. Look, it's one prime factor. Global geopolitics and the instability in the world is the key driver for the gold price today.
It's really been on a phenomenal run. I mean, just go back to the beginning of 2024, it was roughly $2,000 an ounce. Today, it's almost $5,000 an ounce. As someone that's been in the mining industry, could you ever predicted gold to get to the level it is now?
Not in my wildest dreams. And today we've sold gold at close to 7,200 Australian dollars an ounce. These are numbers which, in my life in this business, I could never have forecast that we would be dealing with. And in some sense, it says a lot about where we are in the world.
Yeah, as the head of Westgold, I mean, do you feel pressure right now to produce as much gold as you possibly can while you're fetching more than 7,000 Aussie dollars an ounce?
Yes and no. I mean, for us, it's about safe and profitable ounces. So it's not about ounces at all costs. It's about safe and profitable ounces. That is the mantra we've been running this business to for nearly 4 years now. So yes, there is pressure, but we can never put production in front of safety in a business like this.
Yeah, you've reported record gold production during the quarter. I mean, how did you manage to achieve that?
look, it's a day of records in some sense. We've been working towards this day for at least 4 years now. I mean, Westgold's gone through a transformation and heavy investment in both its assets and its people in the last 4 years. And so we've been working up to this, and in this quarter just gone, all the planets lined up. Our major producing assets really fired. We've got third-party ore that we buy from another group, and the gold price just went crazy. So all the planets lined up and developed a $365 million cash build, which we've never done in one quarter ever in this business.
Yeah, you're sitting on a lot of cash at the moment. What are you going to plan to do with that in the future?
Yeah, it's a great question. I mean, what we've been telling our shareholders is, for us, it's about building cash. Building cash builds a resilient business for whatever happens ahead. So as we are now, the Treasury is really strong. It allows us to continue the investment in our assets, continues to focus upon shareholder returns, and at the end of this financial year, we'll be in a really strong position to basically reward our shareholders from the performance of the year.
From a mining expansion perspective, what do you see as the best approach? Is it doing exploration and developing a greenfield site? Is it brownfield, where you might extend an existing mine? Or is it buying a smaller business and taking over their assets?
It can be all of those things, Ed. I mean, and the approach Westgold's taken is, again, one, let's invest in our organic growth opportunities, our own assets. But we've also catalysed 2 new gold producers in the last 12 months. One, New Murchison, we basically cooperated with a junior explorer, took an equity position in their company and allowed them to fast track from exploration to production very quickly. We're in the process of doing it again now with a spin out of some smaller assets from Westgold into a company called Valiant, which again, this company should hit the ASX in March. What it effectively does is, if you like, bringing a new gold producer to the market. So, I mean, that's the mentality within our company now. If we can cooperate with junior companies for the benefit of our shareholders, happy to do that.
Yeah, just talk to us a bit more about Valiant. Obviously, does it make it more attractive with gold prices being so high to do this spin-off?
Yeah. Well, 100%. You know, the gold price now is, when we close, Valiant inherits 2 underground gold mines that we closed in 2022. I think the gold price back then was circa $2,000 an ounce. So today, with Australian $8 gold over 7,100, they are much different prospects. But for us, they're assets that have value. There's no value prescribed to them in our portfolio and in our share price. So giving them their own life, an independent team and their own funding, allows those assets to be brought to market with the ore from those mines coming back to our processing plants.
And just talk to us about the divestment of Mount Henry recently too.
Sure. Yeah. I mean, the thing which is not well understood about Westgold is how broad the portfolio are. We've got a mixture of mineral assets and infrastructure which are somewhat enviable compared to many. Some of our assets are either regionally remote from our processing hubs or of a scale that we can't execute well. So the divestment of Mount Henry Selene was really about reducing our land holdings, giving these open pit targets an opportunity under a smaller company and for those to be brought to market. Again, in that transaction, Westgold takes cash and takes an equity position in Alicanto, and we'll share in their success.
All right, so what's your focus now for the rest of calendar year 2026?
It's really simple. It's about consistent delivery or consistent operational delivery. You know, everyone within Westgold knows how good our assets are, but we cannot convince the market about that until we put multiple quarters end on end of production of over 100,000 ounces and cash builds of the quantum we've just released.
And do you think gold could crack the 8,000 Aussie dollar mark? Is that possible?
Sadly, and this is where many gold producers are conflicted, I think it can go to 8,000. I mean, it's crashed through 6,500 Australian very quickly. It's probably pushed through 7,200 Australian today. But this is where we're conflicted. We see a high gold price and we're excited as gold miners, but that also is making a statement about geopolitical stability.
Wayne Bramwell, Chief Executive Westgold, great to have you on the show.
Thanks to be here. Thanks for your time.
Coming up, the tragedy of the Bondi attacks left Australians wondering about the nation they live in. But Australians in business and our community should also recognise the contribution that Israeli technology has long given this nation. It's great to have your company here on Business Weekend. Well, senior business leaders have long recognised the technology and ingenuity of Israel's economy, and in the wake of the Bondi attacks, it's right to consider the contribution that Israel and its entrepreneurs have made to Australia for generations. Each year, for decades, Australian business and political delegations have visited Israel to learn about its technology, its education systems and its business nous. And those delegations often have been created by the Australia-Israel Chamber of Commerce. Its Chief Executive, Blum, joins me now. Michelle, many thanks for your time. Just one thing to start off with, the motivation of the Australia-Israel Chamber of Commerce to try and have these exchange of ideas. It's gone on for a long, long time.
Absolutely, Ross. So the Chamber's a 55-year-old not-for-profit organisation, and I guess we're an Australian organisation that really wants to help other Australian organisations accessing innovation, which drives productivity and growth. And I guess that's, we do it through our networks, we do it through our ideas exchange, through our events program, and of course through our delegations to Israel, which is the best way to see world-leading innovation. OK,
so those delegations, though, which have been going, as I say, for decades and decades, they've taken some of Australia's most senior business leaders over a long period of time. What are those business leaders hoping to get from those delegations when they meet the Israeli business leaders and the ideas that they come back with?
Yeah. So there are a number of things they're trying to understand. They're trying to understand the culture of innovation, which is something that is quite unique and strong in Israel. The things that have made Israel startup nation, creator of more startups per capita than any other country in the world, and now unicorn nation, more unicorns per capita than any country in the world. How has this little country done that? And so they want to understand that and how they can apply that to their own organisations. They also want to understand, they want to find solutions to problems for their businesses. So whether it's around digitising their businesses, looking at the future of AI, trying to build out their sustainability or their cyber resilience, we look at all of those different things that are relevant to the leaders we take.
And I think what is probably not understood as well as it should be is the amount of Israeli technology that ends up in Australia as a result of these delegations.
That's right.
Ingenuity that comes here. In some cases, it's even been Israeli companies which then launch themselves into Australia.
That's so true. So there's about over 150 Israeli companies operating in Australia, working with Australian businesses, and it's across all sorts of different sectors, whether it's finance and banking, whether it's health, agriculture, water, cybersecurity, all of these different areas and more. As an example, fraud protection, an Israeli company that works with all the major banks of the Australian banking system, and Australia is one of the few countries in the world that has had a reduction in scams in the last 2 years, and we think some of that technology has been able to deliver that outcome. OK,
so Australia at the moment, we've talked about this a lot on the program today, is struggling to grow, to get economic growth. But one of the real drivers of economic growth is to have more startups, more ingenuity. Yeah. And that, in many cases, is a reason why not just business leaders, but also political leaders from all political persuasions have gone to Israel as part of these delegations.
That's right. We've taken, ministers and heads of departments from across all sorts of different parts.
Future prime ministers,
premiers have all, visited Israel with us to look at different things that have been important for their agendas. Whether it's about thinking about, for example, remote and regional health challenges, or whether it's about water scarcity and drought, or cyber resilience, looking ahead to the 2032 Olympic Games. Some of the big challenges.
Stop there. The 2032 Olympic Games. Where does that come into it?
Well, Israel has amazing capabilities in smart cities technology, obviously cybersecurity, things, even things like sports tech. There's all sorts of things that are construction technology as we build the huge pipeline of infrastructure that's required to deliver the games. All these things are relevant. So Israel has something to show, and a lot of insights and opportunities to work with companies that can be valuable and who are actually already working with Australian organisations here.
So one of the things that popped out to me, for example, when I was doing a bit of research on this, is that the drip irrigation systems,
yes,
that 95% of the Australian wine industry is using Israeli technology for their drip irrigation systems. This is something Australians wouldn't know about, that I didn't know about.
No.
So again, it's this hidden technology, if you like, that has really become embedded into Australia's economy.
That's so true. I mean, Israel's a country that's, two-thirds desert, and so has always had huge issues around water scarcity, but has developed this great, it was the inventor of drip irrigation and all sorts of other smart water technology systems that have been adopted all over the world, not just in Australia. So certainly across agriculture and also with water utilities, there's a huge use of water technology from Israel.
So the one thing about this is that, given what's taken place over the past couple of months, and I know your organisation is not a political organisation, people from all sides have gone. Do you sense that maybe some of these stories have been hidden from the Australian community, that even having this conversation lets people understand that there is all types of Israeli sort of, if you like, ingenuity already embedded into the Australian economy, that these relationships are already very strong? Do you think those things would help the communities going forward?
Without question. I think even in the last, little period where it's been, very challenging, actually in the last year, 2025, is the trade relation between Australia and Israel actually grew by 20%. And that's, primarily around, the use of technology and innovation from Israel going into Australia. So that is continuing to happen, and those relationships continue to be important because Australian business leaders, government leaders, university leaders, they want to understand what the future looks like and how they can, position their organisations best to address, the incredibly rapid change that we're seeing across tech and innovation that's going to change their organisations. And so they look to Israel as one of the places they really can understand what the future looks like. So I think that's why. And
we can't go without recognising, of course, that some of Australia's most celebrated entrepreneurs have very close links to Israel. You think about the Lowies, you think about the Triggerboffs of this world. Again, very close relationships who, again, have taken much of their inspiration from Israel.
Yes, well, I think, some of those people, whether they've, their own innovation and entrepreneurship in Australia has perhaps not been driven by, the connection with Israel, but it is perhaps part of the culture of innovation, I guess, that ability, that view about wanting to take risk, and that's a very big thing. That we have there's an attitude of being not risk averse and looking, I guess, big and bold. And I think that's what some of those Australian entrepreneurs have done, who have those connections, in the same as we see in Israel.
I'll tell you what, it is great to have you in the program today, Michelle. Always good to catch up, and many thanks for your time today.
Thank you, Ross.
There you go. Well, anyway, that is it for the program this Sunday. Up next, all the latest news right here on Sky News. Business Weekend, it's back next Sunday, but of course you can keep up to date with all the latest business news with our daily program Business Now, 4:30 p.m. Eastern Time, and via our website skynews.com.au. Thanks for your company today. I'm Ross Greenwood. We'll see you next week.